All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trade. So it's December 3rd, 2023. First things first, about my Rumble platform. I did finally figure out how to make a Rumble channel. So you can follow me on Rumble at Millennial Trades. I think I have a user profile as well that you'll probably find. But the main thing is that you follow me at Millennial Trades on Rumble. I will leave the link in the description below on this video here on YouTube and also on BitChute. So follow me on some of these social media platforms, these alternative social media platforms, because it's important to branch out. There are new technologies that are being developed. And I do want to talk about Rumble because I didn't really know too much about it. I haven't been using it. I mean, I started the account like probably over a year ago, but I just haven't been using Rumble. And I was doing a little bit of investigating. Actually, there's some recent news from, I think today or yesterday, about one of the main backers for Rumble. His name is Peter Thiel, I think. Peter Thiel, it might be. He's a co-founder of, and used to be the CEO of PayPal. I guess he knows Elon Musk pretty well. He also is a big backer in the deep state Palantir company. So, anyways, the recent news is that Peter Thiel and Rumble are suing the New York AG. I think the one that is like having to resign. There's some drama going on over there. But New York's trying to pass a hate speech law, and Rumble and some other agency or corporation is pushing back against these laws. But Peter Thiel is definitely somebody I want to know more about, especially because he knows Elon Musk. He himself has a video platform. I can't help but wonder if Elon Musk has been inspired to buy Twitter and get into the social media game because of Peter Thiel. Maybe not, and maybe they're not as good of friends as it says they are on Google, but Google says they have a really good relationship. So yeah, I wanted to get that out of the way. Follow me on Rumble, BitChute, Twitter, Instagram. I'll let you know if I start any other platforms. We're going to get the podcast back up and running too. So, all right. Real quick, a little bit of FTX drama, and then we're just going to get serious. We're going to kind of take a look at the markets, take a look at what's coming ahead. But I wanted to mention this. I saw a clip of SBF talking so badly about not only the general public, but his maid and his investors. I guess the people that were putting money into his firms. I mean, it's just absolutely vile. It's from a few weeks ago, but I hadn't seen this yet. And it's just, I mean, it is incredible how this guy is talking about, his maid and the investors and the people that trusted him and that believed in him. I mean, it's absolutely vile. I will link it down below. I think it's actually a short. It's not very long. It's like a short, but let me know what you think. Is it manipulated? Is this really SBF speaking here? Is there any way to excuse this? The thing I really want to say about the FTX thing tonight is that they want us all to focus on the penthouse and all of the drama. But there are real investors here that really got hurt. And it's not just the average, retail investor. We're talking about companies like BlackRock, the biggest asset manager in the entire world, having at least $24 million worth of exposure to FTX. And I'll talk about this later on in my video, but the liquidity problems that could be coming down the pipe are troublesome. So the big story still is the U.S. economy adding more jobs than expected. We talked about some of this, but I want to rehash it so that we kind of can fundamentally understand why this is important moving forward the next couple of weeks. 263,000 jobs were created. It's the least since April of 2021, but it was much higher than the expectations. So the question people are asking is the Fed's policy working? Is the Fed's policy failing? Are the interest rate hikes not going fast? Maybe the Fed's going to be asking themselves this as well. We will only really know if the Fed's interest rate policy is working when inflation hopefully starts to come down within the next few months, a year, 2 years. Hopefully it doesn't take that long. And inflation may go below 2%. I'm talking 2, 3, 4 years from now. Inflation may go below 2%, and they may keep it there below 2% because, Powell gave us some insight this week when he spoke on Wednesday. And this is very important because we talk about the 2% target versus what they're actually looking for is a 2% average. And so Powell refers to this 2% average in his speech. He basically says 2% over time, right? But that's what he's talking about. And he was questioned about this. This is one of the biggest things for me because I got a little bit of clarity as to what their time frame is, how they're measuring this average. And Powell said at least over like a 5-year economic cycle. He says we have to see this through at least till 2025 before we'll really know if we've reached the 2% average over time. So very fundamental to understand. But the week ahead, we've got more numbers coming out. It's going to be a busy week. We've got the non-manufacturing data, the PMI non-manufacturing data, and it's basically a broad look at the economy through service firms. So this is going to be pretty important. My understanding is that we want those numbers down. Correct me if I'm wrong about this, but we want those numbers down, which would indicate that the rates are working, at least in the service sector, to try to cool the economy down a little bit. Consumer sentiment numbers as well, which I think are they're less tangible. They're just less tangible than some of the actual, sentiment numbers, sentiment indexes, fear indexes, this kind of thing. I think they're a little bit less tangible than the actual consumption numbers or production numbers. But, this consumer sentiment index is put out by the Michigan University. So it's not, it's not one of the Fed's numbers or anything like that. We also have PPI, which is the production price index, I think is what you call it. Producer price index. Producer price index. So this is inflation information. I think it comes out on Tuesday. I might be wrong about that. I think it does come out on Tuesday though. And then as far as rate hikes are concerned, we got a couple more weeks to go. We won't, and so does the ECB. But this week we have rate hikes in Australia, Canada, Brazil, and India. So I'm going to kind of just watch those a little bit. Canada is only going to raise rates by like 50 basis points. I think Australia raises rates by like 25 basis points. These are different economies or anything, but you see this and you're kind of like, what wimps? These central banks in these other countries, they're wimping out on us. We might raise by a full percentage point in December. I think there's a chance, depending on the kind of data that we get, especially this upcoming week. German factory orders, right? This is an important index to kind of gauge the health of the European economy. Speaking of Europe, Europe's stock market is up 7 weeks in a row. It was down a little bit on Friday because of the kind of the scare in the U.S. jobs numbers. But their market is up 7%. Or I'm sorry, their market is up 7 weeks in a row. I was looking at the, and also their inflation data, both for consumers and producers, came in cooler than expected. And this was, recently, like last couple weeks or so. Last week, I think. I was looking at the German DE40, just looking on a technical basis. To me, it looks like these European markets need to pull back a little bit. I don't think they're going to break through out of these supply zones that they're approaching. But I could be wrong about that. So that's really what we're going to focus on this next week. Those are the numbers that's kind of, I'm definitely going to be watching this stuff to help me trade. I've been saying this a lot, but man, I don't know how people, if they're not reading news, at least reviewing the news in the morning, I don't know how people are successfully trading, because it's like, yes, it is about volume, price action and volume, right? That is the most important. But a lot of the times you can position for price action and volume based on how the news is starting to look. So just keep that in mind. I wasn't using news for the longest time because I heard so many traders on YouTube saying, oh, I don't use news, I don't care about news. But since I have been trading with adding news into the process, right? I'm not just taking trades just based on news, but adding it into my process. I think it's helped me tremendously over the last even 2 or 3 months. So the liquidity rumors are concerning. Like I said earlier in this video, with BlackRock having exposure to FTX, BlackRock also putting halts or restrictions on withdrawals. You also have the story about Florida and Ron DeSantis pulling $2 billion out of BlackRock. Are other states going to follow suit? You know, they're pulling out because BlackRock is a woke cesspool that's promoting all kinds of degeneracy in this world. And Ron DeSantis doesn't like it. And he's not going to use state funds to, support a company that's putting that kind of stuff over profits, which is understandable. I mean, it's actually logical. But again, these are the cosmopolitans that we're talking about. I mean, Larry Fink, just follow this guy, because this guy, he's the CEO of and one of the founders of the biggest asset management firms in the world. I think it is the biggest. And, like some of his recent comments about Sam Bankman-Fried, he basically said SBF or FTX, there were some, this is his quote, there were some misbehaviors at FTX, right? So, another comment from Larry Fink was that, I wanted to mention this. He says that the crypto technology is still relevant despite what happened to FTX. Maybe he's right, but it makes you wonder how much more exposure somebody like Larry Fink or BlackRock has to, other crypto exchanges, crypto assets that could go under. We just got Binance, I think, filed for bankruptcy. So I don't think this crypto stuff is over with yet, right? That leads me to the last thing I want to discuss in this video, which is the price of Bitcoin, the Pricecast, basically. My Pricecast, and some of the Pricecasts I've been seeing in my comment section. I think it was Sean Stedman that is maybe, this guy in the comment section said that he's expecting possibly a rally to 30 or 40K. To me, it looks like Bitcoin is a long ways away from 30 or 40K, but you never know. We could have a super huge rip, maybe a Christmas rally, maybe a New Year's rally. And you could see a move like that, especially in something as volatile as crypto. I do think, though, crypto is headed for 10K, if not lower. Or I'm sorry, Bitcoin, I think is headed for 10K, if not lower. And, a lot of people think Bitcoin is the only one that matters. There's so many other shit coins out there. I don't really follow them all because, they're shit coins. They're basically worthless. What can you do with them? Absolutely nothing. And unless you have tons of money, I don't see how people are trading this. The fees are just way too high. But anyways, the crypto exchanges and the different altcoins, this stuff is it's just so sketchy. I don't feel comfortable with it. I have heard people like Jason Pizzino talk about you could start putting money in shit coins, but you would want to measure them against Bitcoin, right? So if the shit coin is generally doing a little bit better than Bitcoin is, maybe on the year or since the crash or whatever, you want to kind of measure general strength to Bitcoin when it comes to investing in shit coins. I don't plan on doing it, but I think it's an interesting theory. So let me know what you guys think about the shit coins. What do you think about Bitcoin's Pricecast? We're going to be following gold and silver because there are some moves that are being made there as well. I want to make sure we follow that next week, because on the next pullback, I got to go in and get me some coins with King Charles's face on it. But let me know if there's anything else I missed. Comment down below. Follow me on Instagram at Millennial Trades. Don't forget to follow my Rumble, which will be in the comment section down below. And as always, until next time, I'll see you guys on the next video.